How much money would you make if you invested $10,000 into ISPY, the ETF by ProShares on the S&P 500? Now, we're going to run this calculation today, but I want to do a little bit of digging into this ETF to see if it is actually worth it. It was called out by a channel viewer, which I really appreciate. I love when you guys comment different ETFs and stocks, but I wanted to dive into this one. It's a lower yielding one than what I typically talk about on the channel compared to, QQQI, or even some of our YieldMax ETFs, but still it's had a really solid return, and I think it could have some great potential as a hedge against some of these higher risk investments. So what we're going to do a number of calculations. We're going to calculate the dividend yield, compare it to what they're saying the yield is, and then we are going to do our $10,000 investment. If this thing were to trade sideways, how much money we would make over 10, 20, even 30 years with just a $10,000 investment into the ISPY ETF. So if you guys like ETFs, if you guys like dividend yielding, especially some higher dividend yielding stuff, let me know by liking the video and clicking subscribe so that you don't miss any more content that I'll be put out in the future. I really appreciate you guys for watching, and I hope you enjoy. Doing the research on ISPY was actually the first look at the ProShares website, and I have to say I do like it quite a bit. After looking at the Roundhill website and the YieldMax website, I think they are all really well done, but I really like what ProShares does to bring attention to the power of these ETFs. So the investment objective, of course, for ProShares is high income ETF seeks investment results before fees and expenses that track the performance of the S&P 500 daily covered call index, which is very, very interesting. ISPY gains exposure to the sale of daily call options using swap agreements and does not trade options. Very, very different, lower risk, because I love options. I'm sure you guys do too with these ETFs, but options are difficult, especially as we've seen the last couple of days, last couple of weeks in a down market. Options can be tough, and there's a lot of opportunity for mistakes to be made with options. One thing I think is really cool too with the ProShares website is that they have a $10,000 growth, like a performance tracker. So if you had invested $10,000 in December of 2023 when the fund first started trading, you would at a high have made 18% in under a year, which is phenomenal. And then since it has fallen to 11%, so even a bit of a dip now because we've seen SPY fall down. So I really do like how this tracker works. We can see over the 1 month it is down 4%. Over 3 months, still not doing too bad, up 3%. Now, you can go through all this data. I'm not going to nitpick all the data on here. I do like how they have this laid out. I think it's a beautiful website. But a 1 month return, you can see all this stuff on here. 6 months, year to date since inception, a 13.6% on ISPY versus SPY, which is at 14.31. So it looks like SPY, or at least the daily covered call index, so is a little bit different. Now, important thing, the NAV is 41 and trading volume, expense ratio of 0.55, lower, significantly lower than we've seen, which I really do like. And then we can see that the annualized distribution yield is roughly 7.4%, and that is paid out monthly, which is amazing. I love the monthly dividends. I love it. So we can see all the different exposures that they have, sectors. So this is all because it's tracking the S&P 500. So let's look at the top 10 companies. Of course, you're going to see Microsoft, NVIDIA, Apple, Google, Berkshire Hathaway, Broadcom, all of these. And then you can go through and check out all the holdings and whatnot. So there is a lot of interesting stuff on here that I like to check before I ever purchase anything in my retirement account, because you want to do a lot of research on your own. So now what we're going to do, we're going to look at the dividend history. Very, very important. Let's check it out. So we are back on Seeking Alpha. This is where I go to review dividend history. I really like it. We can see the dividend yield. They have it as a 6%, which is not accurate just because they haven't paid out a full year of dividends. They've only paid 7 dividends so far. But we can actually do a little calculation ourselves. We will try and figure out exactly what the dividend yield would be based on the entire year, which is hard to do. So we are going to take what it said, $2.50. We're going to divide this by 7, and then we're going to multiply this by 12 to get our $4.28 a year. Now, this is the rough estimate on what the dividends would be for the entire year. Now, it could be higher than this, could be lower than this. Like I said, this is an estimate. And then we are going to divide this by the 41.95, which is the current share price, to give us this answer, then multiply that by 100 to turn it into a percentage. So you're looking at a 10.2% dividend yield, which is phenomenal. They don't even have it as that so far. So I'm very, very curious. Maybe they're estimating the dividend drops a little bit, but still a 10% yield. And as we've seen over the last 7-8 months of 11% return, you're looking at a 22% return from this fund. And while I know a lot of the YieldMax funds boast more than that, 22% a year is insane. Absolutely insane. And so when I run the calculation on the dividends, it's just going to be on the dividends. It won't even talk about the price appreciation, which we can actually check into that as well. But really, really interesting. Now, what I want to do, I'm going to compare this to SPY in a drip calculator and see which one is better to hold. So on dividendchannel.com, we have ISPY, we have S&P 500, and the comparison, it is tight. But we can see with dividends reinvested, SPY wins out by about 4%. So ISPY has a 19.51% return, whereas SPY has a 23.57% return. Now, what I'm very, very, very interested in, as we can see that these have both run very, very high. Would ISPY outperform SPY if it was to trade sideways? Because we saw that some of these pullbacks where it started to trade sideways, ISPY started to gain. It got close, and then when the market rebounded, SPY did better, which we are expected to see. That is very normal for the underlying fund on these ETFs to outperform in a bull market. But the key is what happens in a non-bull market or just a flat market. So with dividends not reinvested, the rate of return is roughly the same. Not much of a difference there at all. 0.3% for ISPY and less than 0.01% for SPY, maybe a little more than that. But still a pretty decent drip calculator. I love seeing these. Sometimes the YieldMax funds really, really underperform the underlying security. So I like seeing that ISPY is able to keep up with SPY. So what I'm going to do, I'm going to plug this money in. If we invested $10,000 with a return rate of 7.35% over any number of years, how much money would we get? Now, this is very, very speculative because the return rate could, or the distribution rate could drop. The ETF, the underlying ETF could consistently go down if we've seen, the S&P 500 drop. So there's a lot of things that go into this. So this is by no means saying it's going to go here. And if you invest $10,000 today, this is not financial advice. It's simply a calculation to see how the potential of this fund could do over a certain time span. So after 1 year, this one's always the easiest calculation you have with $10,000 invested, $735 in returns, which is phenomenal. Absolutely phenomenal. And then this is also not including price appreciation, which is a negative for ISPY because like we've seen, it's returned over 11% over the past 8 months. So adding 11% to this return rate would significantly change it. So I might do that after. So at 5 years, we see we're all the way up to almost $1,000 a year just based off this 7% return. When we kick it all the way up to 10 years, now you're making $1,300 a year off of dividends, which is over 13% of your money invested every single year coming back to you. Now we're going to go straight to 20 years. After 20 years, you're now making $2,800 a year, and your total return is $31,000, which is phenomenal. Absolutely phenomenal. And let's say that you are currently 25 and you want to retire at 65 and you invest $10,000 into this fund. It trades sideways. You would end every year making $5,700 with a total return of $74,000, which is more than what most people make in a year. Now, the interesting thing, let's add in what the price appreciation was for the last year. Now, I know this is very speculative and that we will have up and down years in the market, but let's say let's do 18.35%. So after 1 year, you make $1,800, a significant increase from just the normal, just the dividend calculation. If we go to 5 years, that kicks all the way up to $3,600 a year. And in your first 5 years, your total return is over $13,000. So by year 4, you have made almost your initial investment back, which is crazy. And this one is a lot less speculative than some of the YieldMax funds, some of the Roundhill funds, because this one is a lower yield, it's more consistent, and it tracks the S&P 500, which I love. After 10 years, you are now making over $8,000 a year in dividends. Or total returns, not just dividends, total returns if it keeps up, and you've made $43,000 in just 10 years. We'll go to 15. At 15, you're making $20,000 every single year off of this fund. And continuing, if you don't pull out any of the money, your total return is $115,000. So let's see. So at year 13, if we include the 11% price appreciation, you actually would make the same in 13 years that you did in 30 years with just the distribution or just the dividend yield, which is crazy. At 20 years, we have $45,000 every single year coming in, which is roughly what I think the average American salary is, about $45,000 every year from your $10,000 investment, and your total return is $280,000. Now, what I love about this one is this has a lot more potential to be realistic than what we've seen with the 100% plus returns from the YieldMax funds. Again, I love the YieldMax funds. I think they're crazy, but still, let's be realistic here. Finally, after 30 years, let's say same scenario, you're 25, you want to retire at 65, you invest $10,000. At the end of 30 years, you are now making $240,000 to nearly $243,000 every single year in returns, which is phenomenal. And total, you have made $1.5 million, which is insane. You have made $1.5 million. So I love that. I love this fund. I do, after doing a bit of research, it might be one that I purchase into that I think could do well, especially if we start seeing the S&P 500 trading sideways. But let me know what you guys think. It's a little bit different than the normal high returns, high distribution yields that I do, but I do appreciate it. And I love when everyone comments on these because it gives us something to hedge. So I want you guys to think about that. You need to be careful with your portfolio. This is not financial advice, but you need to have some solid diversification. Even if you're younger and you want these higher risk YieldMax funds, I think that's great. Do what you want to do, but always make sure that you have something making you consistent, lower returns that will be safer for your money in the long run. So hope you guys enjoyed the video. Again, if you did, don't forget to like and subscribe. I put out videos 2 to 3 times a week on high yield investing, on dividend investing, on investing when you're young, and just overall what funds I like and what I've seen pop up in the market. So if you're interested in that, don't forget to like and subscribe. Thank you guys for being here. I'll see you in the next one.